you guys that in my business principles classes, we're gonna make it pretty simple, quick, and easy for you to get the grade that you need. And also share with your friends, subscribe, follow. Y'all, you guys that want to learn business quick and simple in 10 minutes or less, you like to cram, you just don't understand material, videos help your TikTok, your YouTuber, that type of person. I understand school's advancing. YouTube, video streaming, that's the way that's happening. So right now, quick to the point, that's where you get 10 minutes or less over this material. And that's what my goal is. I want you to understand this material 10 minutes less so you can go back and review and pass the class so you can get the grade that you deserve. So real quick, let's pull up this. Let's share this material with you. All right. Chapter 19, savings and investments, right? That's where we left off. That's what we're covering. We're going to go do this quick review for. Okay. Now, I know you're feeling lost. You're confused. You feel like you're just in a different place right now. Okay. That's all right. This is what this is designed for, 10 minutes or less. And I know you're thinking school what? Vacation over what? Remember something from last year or even yesterday? No, I wasn't there. My brain is right in this galaxy, somewhere else, having fun, doing something different. All right, it's time to get you out of the galaxy back here on planet Earth. Now, I don't expect you to be Albert Einstein. I expect you to do the work. Dreams don't work unless you do it. That's what happens, right? So, review 10 minutes or less right now to learn important terms for this evaluating saving and investments. All right, so if you learn something or you want to learn something important about your money and invest it and make it grow, there's two options you have. You can have a low safety, high safety investment, which means you have a high risk or a low risk in your investment. What's important about that? Low safety means high risk, high safety means low risk. So you want to get the max amount for your return, you pick a low safety, high risk. So you're looking at stock markets, things like that, high risk yield options. So there's a high chance that you might not get your money back. But when you do, you hit it big. Okay. Your savings accounts, things like that, are considered high safety, low risk. Okay. So think of basically high risk, high return. High risk, high return, low safety. Low risk, low return, high safety. Those are key things you need to know about savings and investing. That's what's going to help you determine how you invest your money. You can read the other stuff, you can stop this, read this page, but understand just what I just stated. We're hitting this 10 minutes or less. Low risk, low return, high safety. High risk, high return, low safety. Your high risk are going to be your stocks, your bonds, investments like those. Your low risk is going to be your savings account at your bank, at your credit union, your CDs. There's low risk, you get a return, it doesn't pay high. That's what you need to understand when you're investing money in safety and risk and how it plays factors, how much money you get, how much extra you make. That's important. Let's go to the next slide. Yield. Yield is important. You know, just trying to ask, what is yield? All yield is the percentage of money that you earn. That's it. That is your interest. That is your money maker. Okay, just on that graph, 5%. That's all you need to know. That is your money maker. Okay, how much money are you getting back from that money you invested? And that's what you want to know so you can determine how much you're going to make. And that percentage is driven from the term that we just learned what? High risk, high return, low risk, low return. So the safety and risk factor play determine into that yield how much you're going to earn. Let's go to the next slide. Right, potential returns. All right, high yields, greater risk of loss. So we're going to look right here. High risk items are your commodities, precious metals, gems, collectibles. Low risk, banking, savings accounts, U.S. savings, bonds, U.S. treasuries. Okay, this helps you understand what type of risk factor you expect to be in as you're looking through these through these different type of investment opportunities. If you want to be in the middle, you're going to do it with the growth stock, growth mutual fund, real estate, might do money market funds, high quality corporate bonds, municipal bonds. But if you want to play and gamble a lot, precious metals, gems, collectibles, things like that. Why? Because it's all about what the market is stating. Okay, just like real estate goes up and down. That's why it's getting towards the higher end. It tends to be governed a little bit by things that are happening in the market and where people want to live and the factor and condition of your house. But also a huge factor plays the supply and demand. What's going on? Okay, so as you see the graph right there, that picture, low risk, you can see which ones they get identified as savings accounts, moving up towards high risk. Okay. Any questions? Send me a question, we'll answer it. This is a key thing I want you to understand. Look at the graph, read it, you can go through, read the other side of the slide. Okay, liquidity, that is very important. Okay. It is the ease with which investment can be changed into cash without losing its value. That is so important. Because you always heard a term about companies have liquidity. They're liquid. This account is liquid. This account's not less liquid. They can use that term all the time. What does that mean? It's how quickly they can transition that money into cash. So if I have money sitting in a savings account, that account is more liquid than the money I have invested in equipment. If I have equipment, I gotta sell that equipment. I gotta find someone's gonna pay for that equipment at a price that I'm willing to sell it for. That's gonna take time. So that's not as liquid as the money I have in savings account. And that's what you need to understand. Money that you have in savings account, you can go there, pull it out, grab it. You got the cash, right? No, you got money put into a car, you got money put into equipment, you got money put into something. You got to sell it, and you got to find someone who's willing to pay at the price that you're willing to sell it at, or as close as possible. And that's going to determine how liquid that product is, or that item, that account, and that's going to determine how much cash you get. Okay, taxes. Everybody's got to pay taxes. Okay, so taxes reduce your rate of return. That's the key thing you need to understand here. You got to understand how much you're going to be expected to pay in taxes, so you know how much you got to make. Okay, so right here, straight to the point, it says you're at $100 in interest, but 20% is taken in taxes. So you know that you're gonna have to pay. You're only gonna earn $80. You didn't earn that whole 100. Okay, understand that, because just because you made $1, you're not gonna make as much. You want to make sure that the investments get generated enough to also cover enough taxes and time that's going to pay for expenses, and that you took this money invested instead of another opportunity. Okay, I know we're talking about opportunities. We'll get to opportunity cost. This is a fact. The opportunities, that's why it's important to understand, because taxes reduce the amount of your earnings, and you want to make sure you maximize your opportunity cost, which is the most you can make of your money, the most you make of your time. So you got to understand all your expenses, and taxes is one expense that you understand and how it affects you and how in earning cash and money for you or your business. All right, that's it. We're done. That's 10 minutes or less for Mr. Freeman's class on YouTube. If you got any questions, comment below. I'm going to post this up. Subscribe to the channel. We're going to get rolling with a whole bunch more events here soon. That's it.